Hi, this is Andy Hoffman, Marketing Director of Miles Franklin Precious Metals in our 25th year in business. It's actually Wednesday, October 8th in the afternoon, and the title of this week's audio blog is Has It Begun? Which I'll get to in a second. This week, we unquestionably saw acceleration of the downward trend in global economic activity, commodity prices, and currency volatility. Not to mention ugly plunges in European stock markets, following unequivocal evidence that Germany, the so-called strongest European link, is amidst economic freefall. Frankly, there's not a remaining doubt that Europe is deep amidst a triple-dip recession, and in many countries, a depression rivaling the 1930s. QE just started last week, but it hasn't helped much, as despite the German 5-year bond yield falling all the way to Japan's zero-bound levels, the German stock market has plunged 10% in a month's time. Next week, a hearing regarding the German Constitutional Court's objection to QE will be heard in the EU courts. But who are we kidding? QE will occur no matter how it turns out. Many think the Germans will eventually secede from the euro currency, and I would agree. However, no politician would want to take on such a burden, given the short-term economic implosion it would cause. Therefore, the markets will do it for them. After all, German banks are the largest holder of French bank debt, and French banks the largest holders of pigs bank debt. Comically, both Japan and German bankers complain of deflation, when in the former case, Tokyo and Osaka were ranked the world's two most expensive cities in 2012 and 2013. That is, before Abenomics took 45% off the yen's value, causing a multi-year high in Japan's doctored CPI and an economic collapse equivalent to the immediate aftermath of the 2011 tsunami. Remember, Japan is one of the world's largest importers of foreign goods, and therefore the plunge in the yen has particularly catastrophic economic implications. As for Europe, simply Google the Zero Hedge article titled, "Clearly, Europe has a crushing deflation problem." Oh, wait! In it, the results of a survey are published asking Europeans in all countries what their greatest concerns currently are. And wouldn't you know it, not only was rising prices slash inflation the number one answer in nearly every country, but by a mile. Here in the States, of course, plunging interest rates would suggest deflation if they weren't artificially depressed by the Federal Reserve, in large part because the world's largest debt edifice couldn't survive a day with rates even remotely close to normal. That is why I advise everyone to read one of my most important articles ever, penned in May, titled "The Most Damning Proof Yet of QE Failure." In it, I describe how no matter how much money printing, market manipulation, and propaganda the powers that be utilize to give the appearance of economic recovery, interest rates worldwide will continue to plunge, front-running the inevitable QE to infinity seen in the terminal stage of all fiat currency Ponzi schemes. Of course, eventually, hyperinflation will destroy all of those paper gains when it comes, but right now, all the money managers of the world have to play the game of front-running the Fed. Of course, we have long asserted that the propaganda leg of the aforementioned manipulation troika long ago broke, as frankly, it's hard to believe anyone in the real world believes the US or any economy is, quote, recovering, or will do so anytime soon. This is why global equities and interest rates are plunging, commodity prices are in free fall, and the, quote, dollar index is being bid dramatically higher, yielding significant economic shockwaves the world round. Europe is in particularly dire straits, as the plunging euro has already supplied the inflation Draghi so badly wants, even before QE has started. Trust me, there's no coincidence that Scotland and Catalonia, Spain hold secession votes, or for that matter, the inevitable secession votes in Venice, Italy, and the potentially cartel-shattering Swiss vote as to whether the franc should again be backed by gold, or that social unrest, militaristic violence, and hyperinflation are sweeping the world from South America to the Middle East to even Southeast Asia. The massive inflation exported by reserve currencies like the dollar, euro, pound, and yen is wreaking economic havoc. And as I wrote in The Single Most Precious Metal Bullish Factor Imaginable, the traumatic currency volatility that it causes is on the brink of tearing the world apart. The final currency war has now taken a dramatic step forward, and today's announcement, literally as I'm writing, that the Fed's September 18th minutes conveniently talked down the strong dollar I've been shouting about for weeks, speaks of this truism in spades. The cartel desperately attacked PMs this morning and goosed interest rates to paint the tape ahead of this decidedly dovish statement, but all for naught, as rates are plunging anew, stocks surging, and gold and silver screaming as loudly as imaginable that the respective bottom is in. Particularly as, per the final currency war noted above, the Fed expressed concern that the dollar has risen too far. I wrote yesterday that 2008 is here, with one temporary exception, and never before have I felt more strongly. I truly believe it has come, i.e., the beginning of the end game of global currency collapse. Once that temporary exception of blatantly supported financial markets is overrun, the reality of the worst global economic outlook in a century will be as universally understood as death and taxes. And this time around, the only thing QE and ZERP will accomplish is hyperinflation. Before I go and remind you of some of the very exciting near-term events at Miles Franklin, I want to highlight this morning's article titled $50 million of silver. That's it? As I strongly believe the fourth major silver shortage in 6 years will arrive shortly. And when it does, I fear metal will be extremely difficult to source for some time to come, particularly at prices even remotely close to today's cartel-subsidized levels. When I wrote Cartel Suicide last month, describing the catastrophic damage to the precious metal mining industry caused by the past month's maniacal paper raids, I wasn't kidding. I believe more strongly than ever that production will plummet at unprecedented rates in the coming years, likely to never return to the current levels. And this, whilst global demand is currently at record levels, particularly in silver, where even the exchanges purport to have next to no actual inventory available for sale. In 50 million of silver, that's it. I refer to the fact that the world's largest physical delivery exchange in Shanghai has lost 90% of its inventory since April 2013's infamous cartel paper raids, leaving just $50 million of supply for the countless billions of physical-only contracts likely to be purchased in the coming years now that its international board has been launched. Finally, I encourage you to sign up as quickly as possible for the limited space on Miles Franklin's free All-Star Silver Panel webinar next Thursday, October 16th. I will be moderating, hosting a panel consisting of David Morgan, Harvey Organ, Steve St. Angelo, and Miles Franklin's own Bill Holter. I've done a great deal of preparation beforehand and anticipate a significant amount of enlightening information to be disseminated. And for those that can't get on the call, we promise to upload it shortly afterward onto YouTube. Also, look out for coming articles regarding Miles Franklin's multiple after-hours ordering options, as well as some materially positive new features of our industry-leading storage program at Brinks Montreal. Well, that's enough for now. However, I can't emphasize enough my belief that it has started, and before it's over, the ensuing global stagflation and unrest will likely be unprecedented. Consequently, we cannot be more vehement in our belief that this may be our last chance at financial survival. And for those taking the initiative to protect themselves with physical precious metals, we hope you'll call Miles Franklin at 800-822-8080 and give us a chance to earn your business. And as always, I can be reached via email at ahoffman@milesfranklin.com. Thanks and have a great weekend.